Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing trading cryptocurrencies using Fear and Greed Index, part 1 of 2. It's a well-known fact that emotions move markets. Greed will drive the prices up and fear will drive them down. Human psychology always ends up being predictably irrational because a lot of people tend to react in a very similar way in certain situations. If we know that people almost behave the same way in certain situations, it is possible to make money by trading just being contrarian. As an example, Baron Rothschild made his fortune by buying when others panic sold. His philosophy was relying on buying when there's blood in the streets. John Templeton once said to invest at the point of maximum pessimism. This rings true simply because the greater the fear, the larger the opportunity for profit. The Fear and Greed Index. If we conclude that a trader can be profitable by acting contrary to how others are acting, then it is important to pinpoint moments of fear as well as moments of greed. This strategy is quite simple. If others are greedy, be fearful. If others are fearful, be greedy. One well-known tool that measures cryptocurrency market sentiment is the Fear and Greed Index. The Fear and Greed Index measures cryptocurrency market sentiment by aggregating data from various sources and generating them into one number. This is on a scale of 0 to 100. A value of 0 is known as extreme fear, while the opposite, a value of 100, represents extreme greed. The data that the index uses is compiled daily. You can also glean the data of the Fear and Index on a daily, weekly, monthly, as well as yearly basis. Tendencies that show in the Fear and Greed Index. Extreme fear is a place where the first signs of greed are created. As we can see from the graph here, fear can quickly spiral out of control. However, every time the Fear and Greed Index is close to or below the 10 mark, the value of the index quickly reverses to the upside. This brings us to the conclusion that every time high levels of fear dwells in the minds of traders and investors, opportunists use this market climate to their advantage. Following the ways of the savvy investors such as Warren Buffett and Baron Rothschild or John Templeton, these bargain hunters get greedy when others were fearful. However, just like fear can quickly gain momentum, so can greed, and since emotions move markets, extreme fear drives prices down while greed drives them up. Check out our part 2 of Fear and Greed Index guide to learn more about how to use this tool and predict market movement. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.